Hey there, good morning. Welcome to your September 16th edition of the Monday Morning Market Update. I am your host, Sean Richard with Gateway Mortgage Group. Thanks so much for joining me today. I hope you're having an incredible start to your week and you had a phenomenal weekend as well. So let's jump right into the news of the hour. We've got reports that there was some attacks on Saudi Arabia oil refineries, and about half the refineries have been shut down. This is causing a spike in crude oil prices. Now, we're not going to see that at the gas pump immediately, but that's definitely a negative for the global economy. Mortgage bond prices reacting very favorably. If you recall, whenever there's typically negative economic news, mortgage bond prices spike or go up, and mortgage rates tend to come down a little bit. So initial reaction from the market is favorable for mortgage bonds, people moving money out of more aggressive, riskier equities like stocks, moving them over to bonds, which includes mortgage bonds. So we're seeing that spike this morning. So mortgage rates down a little bit today. Now, with that being said, an increase in crude oil prices ultimately is an inflationary data point. And if you recall, mortgage bonds hate inflation. Inflation is the arch enemy of mortgage bonds. So it'll be interesting to see how that impacts us. If we sustain these higher oil prices, that could cause problems for mortgage bonds in the future. So we'll want to watch and see how that impacts us moving forward. And also this week, we've got some pretty big information. We've got the Fed meeting this week, Tuesday, Wednesday. We're going to hear from Jerome Powell on Wednesday after the meeting, and pay close attention to his comments. We are expecting to see a 0.25% rate cut in the Fed funds rate. Again, a cut in the Fed funds rate is not a direct mover of mortgage rates. It really has to do with the reason that the Fed cut the Fed funds rate. If Jerome Powell comes out and talks about inflationary scares due to the attacks in Saudi Arabia and crude oil prices going up, then that could, and that's why they cut it, then we could see that hurt mortgage bonds and ultimately mortgage rates. So again, just a cut by itself does not mean we're going to see lower mortgage rates. It really has to do with the reason behind the cut. So we'll have to listen closely to what he has to say on Wednesday of this week. Other than that, there's a few other pieces of data coming out this week, but that's the big impact for this week. If you have any questions, don't hesitate to leave them in the comments section below. Make sure to check out the Twitter link above for the mortgage bond chart, as well as the chart of the 10-year U.S. Treasury. Let me know if there's anything else that my team and I can do for you. You can always reach out to us at 817-406-0260. Have an incredible week, and I'll catch you up with you next Monday.